All right, let's make this quick and short. I'm gonna be super busy. Friday, Jan 17, 2025. First up, DELL. I have a couple of puts that I need to roll or let it assign. I think I will roll it. The put was 113, I believe. I gotta take a look, but I will roll it to 110 next week. That's fine. Tight spread, so it's not a big deal. I already have, I have a small position, 100 shares, maybe 120 shares. I know it's more than 100, but for now, I don't need to add any more to it. The big one that surprised me this morning was QRVO. Big jump because of activist investor. It's gonna be gone from the portfolio. Bye bye. I have a cover call there, and it's gonna be gone, which is fine. It did well. No complaint here. I got my double-digit return. Bought it on the tax loss dump. Get assigned on a tax loss dump, and I have been doing more put spread and cover call for the past 6 weeks or so. So say bye bye. But it's popping right to, as you can see, pre-market. It's popping right into the gap down high, right? So that's gonna be a resistance. There's gonna be a lot of regret holders selling. Let's see how it absorbs. All right, so that's always when you have a massive gap down like this and a large population of people buying it, well over 100. So yeah, it's gonna be a lot of selling. So would I return and sell another naked put down the road? Most likely. Okay, we have seen this activist investor before. Sometimes it doesn't work out, not always. And last one for today, to keep it short, SMCI. It is hanging around the 20 and 50 MA confluence. Nothing too exciting, but basically it's in the middle of a channel, right? That's tough, but it is kind of lined up with the low going back to 52 week a year ago. Can it fill the gap? If you want to be safe, do let's see what kind of option play you have going to next week. The lowest seem to be 24 and a half, which is kind of crazy to be that low, only that low. 24 and a half is basically where that's not a bad one, because if you sell that put, basically you are buying it at the gap fill down here, right? So if you really want to own it, I think selling a naked put at the lowest potential spread is a play, but that's about it really. I wouldn't, you can buy the share if you don't mind taking that kind of risk, because you kind of in the middle of a channel. But for me, it better off wait for the gap fill, or at least 25. Okay, it's unfortunately the put is not all that exciting as far as the risk and reward. But if I were to sell a naked put, I go with the 24 and a half, because the differences between the 24 and a half and the 25 is not a heck of a lot. Okay, not that much. Now, if you go out to January 31st, the end of the month, that's look more like what I like to see. Okay, that I can see selling a put at 24. I like that for 30 something cents. Okay, I like that naked play right there. If you really want to own it, right? You're selling a naked one at 24, but that's about as high of a risk I'm willing to take. Now, if you fill the gap at 24, yeah, 23 and a half ish, absolutely, buy some share. It's a volatile stock, so it can be a big move. You know, as far as upward move, let me extend this potentially. That's where it can go, right? I mean, in a week or two, it's gonna line up with the falling channel, right? So it's gonna line up into the 50 range. So if you buy it right now at 31, potentially that's a big move from 31 to 50. Like I said, very volatile. All right, people, time to work.